on a very busy day with a slew of big earnings coming after the bell tonight. And look, Carol, like this market was actually gonna, just puke earlier today, but it's now seeing some life as we get closer to those closing bells.
Is that on the CFA exam?
It was, page 1073.
A Bloomberg function,
which, believe it or not, is still chapter 1.
Puke.
Okay.
Having said that, fascinating. Tim and I were like looking at headlines, trying to figure out why all of a sudden we took a leg to the upside. I mean, we've been in the red all day, and now you've got more names in the S&P 500 because now all of the major equity averages, even if just a little bit, are in the green.
You know, it's interesting. We did see shares of, well, I should say the index down as much as 2.3%, as high as 0.24%. So a big range today. The real thing that we're concerned about is earnings. We got $6.2 trillion of companies reporting after the bell today.
Yeah, Microsoft and Meta are first up. And of course, tomorrow we got Amazon and Apple. Worth noting here that the NASDAQ 100 is now up 1.6% for the month, and the NASDAQ Composite up 0.9% for the month. So much for April being a horrendous month for these big tech companies.
Yeah, you have to also look at, though, the last 20 minutes of trading. That's usually going to be fun buying, right? So whether or not that's going to be sustainable longer-term buying, that truly is a question, which then puts the highlight and the onus on these big tech names to deliver.
Absolutely. And we talk about the monthly performance, too. I mean, I know there's been a lot of talk about the wire-to-wire change or lack of, if you will. But, of course, we can't be remiss in not pointing out the volatility in between. Realized volatility still at historical levels, and implied volatility over the next 30 days also well above recent moving averages. Your numbers on the day as we await those earnings. An S&P 500 that's going to close out the day relatively unchanged, up about 0.1%. The Dow up 0.3%. The NASDAQ down 0.1%. And the Russell 2000, Carol Masters, going to close out the day lower by 0.6%.
All right, guys, we've got earnings out. Qualcomm already crossing the Bloomberg terminal. Let's go to the outlook. Sees third quarter adjusted EPS of 260 to 280 share. The street estimate is for 266 a share. Talking about revenue as well for the third quarter, 9.9 billion to 10.7 billion. The estimate is 10.33 billion. Stock right now unchanged in the after hour. Let's go back to the second quarter, the quarter that was. Second quarter adjusted EPS 285 a share. That's 4 pennies better than what the street was expecting. And second quarter adjusted revenue also coming in better than expected, 10.84 billion versus 10.64 billion, the estimate. But I think investors kind of a middle ground in terms of the outlook here, Scarlett. So maybe not necessarily loving it.
All right, some commentary too from the CEO, Cristiano Amon, saying as we navigate the current macro and trade environment, we remain focused on the critical factors that we can control, our leading technology roadmap, best-in-class product portfolio, strong customer relationships, and operational efficiencies. We're hearing that a lot from all these CEOs about managing what they can control. That's usually costs.
As a reminder, Qualcomm gets about 22% of its revenue from Apple, about 19% of its revenue from Samsung, about 12% of its revenue from Xiaomi. So sort of a good barometer when we think about the health of the consumer tech space, specifically when it comes to smartphones.
Yeah, and then to that point, let's take a look at that handset revenue, for example, coming in at $6.93 billion, up 12%. So clearly handset read-through not so terrible.
Microsoft numbers now crossing the wire here. The revenue number does look like a beat. This for their fiscal third quarter, $70 billion, $70.1 billion if we're rounding up. The street on average was looking for about $68.5 billion here. I'm still looking for some of the other numbers here, but at least a beat on the top line. I need a few more minutes here to dive into the release.
Yeah, it's just crossing, but let's point out to everybody as Microsoft continues to pour across the Bloomberg terminal, we've got the stock up about 6.5%. It was down about 6% year to date coming into these earnings, but Scarlett, definitely seeing a pop here in the aftermarket.
Yeah, this is a stock that's been down about 6.5% so far this year. And since its last earnings report, also down 11%.
All right, here we go. So operating income does look like a beat, up about 16% in the most recent quarter, up to $32 billion. Net income, the bottom line, up 18% to $25.8 billion. On an EPS basis, there does also appear to be a beat based on the average of Bloomberg estimates. The company says that with its Azure unit, this is basically the cloud computing unit, up 33% on a year-over-year basis. The street was looking for growth of about 31%. Its commercial products and cloud services revenue increased 11% in the quarter, and its consumer products were up about 10%. LinkedIn up 7%, and the dynamic products and cloud business, when you combine those up about 11%. Remember, this is on the revenue side here. So it does look like some pretty healthy beats all around, and you're seeing the shares drift higher in the after-hour session.
Yeah, Satya Nadella is saying that, quote, cloud and AI are the essential inputs for every business to expand output output, reduce costs, and accelerate growth. From AI infra and platforms to apps, we are innovating across the stack to deliver for our customers. Everyone's going to want to know the outlook here. The company says it will provide forward-looking guidance in connection with this quarterly earnings announcement on its conference call and webcast. We will bring those numbers to you live as they do cross.
And no surprise, Amazon following Microsoft higher as well. If you take a look at cloud, it goes Amazon, and then it goes Microsoft, and then you get Google. So you definitely have Microsoft providing some strong numbers there. I do want to point out that we're talking about that 33% growth. In the last quarter, its second quarter, that cloud growth was 31%. So not even beating, but also increasing on a quarter-on-quarter basis.
And I'm so glad you mentioned that, because that was a big concern, that there was going to be this continued deceleration of growth in Azure and other cloud services. The fact that it reaccelerated is certainly a relief for most investors. I talked to Goldman Sachs analyst Kash Rangan, who was saying that anything below a 30% print on that Azure and cloud services revenue would have been concerning. So this kind of removes that, at least that layer of concern.
All right, folks, if you're just joining us, Microsoft soaring in the aftermarket, up about 6% as we speak. This after their third quarter revenue topped estimates. So they are looking for $70.07 billion. The estimate on the street was $68.48 billion. So again, the street liking what the company had to report. We talk about intelligent cloud revenue also coming in better than expected for the third quarter, $26.8 billion versus $25.99 billion. So again, pushing the stock up about 6% here in the aftermarket. That's a big bump to the upside.
Look, it was a great quarter, no question, but I think most investors are going to have questions about what the current quarter looks like and what the outlook looks like.
Yeah.
You know, a weak dollar is certainly a beneficiary. The tech companies are a beneficiary that do business across the world. But we're getting other earnings crossing right now, too.
Well, let's get to Meta. I was just going to point out Microsoft's CapEx spending also going higher, but Meta, Alix, are now crossing the wire.
Yep, taking a look at Meta, its first quarter revenue coming in at $42.31 billion. That's a little bit light when it comes to estimates. Operating income, $17.56 billion. That's much better than estimates. Guys, want to get to the outlook. It sees its second quarter revenue outlook coming in anywhere from $42.5 billion to $45.5 billion, beating estimates.
All right, advertising revenue as a whole, which makes up the lion's share, if not more than that, like 90% of its overall revenue, rose 16% year on year for the quarter. The other revenue higher, growing at a faster rate of 34%, but that's only about $510 million compared to the overall advertising revenue of about $41.4 billion.
All right, stay with Meta, guys. So we're up about 4.7% in terms of the second quarter outlook for revenue, $42.5 billion to $45.5 billion, quite a range. Estimate is for $44.606 billion. And I should point out that the company, some commentary talking about CapEx. We anticipate our full year 2025 CapEx, including principal payments on finance leases, will be in the range of $64 to $72 billion, increased from our prior outlook of $60 to $65 billion. Again, Meta up about 3.2%.
The company calling out Mark Zuckerberg specifically saying we're making good progress on AI glasses and Meta AI, which now has almost 1 billion monthly active users. We've got a strong start to an important year. Our community continues to grow and our business is performing very well. The business is an advertising business at this point. Obviously, Mark Zuckerberg thinks that Meta AI and the hardware are certainly growth areas, but it's interesting that he calls out AI and the glasses with the 1 billion the monthly active users at the top of the press release.
I think it's interesting also that they're actually slightly increasing that CapEx spending. And just real quickly back to Microsoft, their CapEx expenditures as well, when you factor in all the other things, still at that roughly $21 billion level and going higher here. So that was a big question as to whether we were going to see a material pullback in some of those CapEx forecasts that they had given us in quarters past. At least for right now, it does appear that they are at least sticking by them, and in the case of Meta, increasing them, which is interesting given that Mandeep Singh of Bloomberg Intelligence has noted that the CapEx over at Meta is growing faster than any other hyperscaler. So they are spending more on AI. And the big question is, when are you going to see that return on investment in its product line? It's rolled out Llama, the large language model, in WhatsApp, but it hasn't necessarily done that in the Facebook app or the Instagram app.
Two things to point out. Meta also seeing its full year total expenses a little bit lighter when they did what they did see between $113 billion to $118 billion. It's about $1 billion less on both ends that they thought. I also want to point out, too, going back to Microsoft, that the Azure growth that was attributable to AI was about 16 points It was 12 points in the last quarter. So the monetization and being able to profit off of AI is delivering, and that's going to be a key point for these companies.
Microsoft and Meta, certainly the companies we're watching, but not the only ones that are reporting. Robinhood out with numbers right now. Shares bouncing around, down about 1.9%. The company did report net revenue for the first quarter that met the average analyst estimate. Adjusted operating expenses came in above estimates. Adjusted EBITDA coming in just shy of estimates. Shares right now down about 1.5%.
All right, guys, eBay also crossing the Bloomberg terminal. It's actually up about 10% year to date. Let's get to the outlook. It sees second quarter net revenue of $2.59 billion to $2.66 billion. The estimate on the street is $2.6 billion. Reports also the CFO transition and executive leadership changes. So we've got some changes in the C-suite. And again, we're continuing. Let me just take a look at eBay in the aftermarket, folks, just up about 0.5%. So we are definitely seeing some stocks on the move. You got Robinhood moving, Meta, definitely we're seeing some big moves in Microsoft. Sorry, just pulling them up here. Meta's up almost 3%, and Microsoft continuing a big bump to the upside, guys. It is up, as I pull it up about 5.6%. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow.